Welcome to the October 30th, 2020 video version of the Wagner Daily. My name is Rick Petticelli, and as usual, once a week, this video replaces the written commentary portion of our report. Hopefully it serves as a nice change of pace, as well as offer some insight as to how we set up our charts and what timeframes and indicators we use. First up, we're going to run through a few broad market averages, then cover open positions in the model portfolio, and finally we'll take a look at what's out there in terms of actionable setups. On Thursday, the S&P tried to bounce back from Wednesday's nasty sell-off, and it was able to do that heading into the close before it sold off. It stalled at the prior day's high, and in after hours trading, it's down just a bit under 1% here. So if it holds, the S&P currently would be opening around the 3280 area. That's if it stays at that level. So what we're looking at in the S&P is if it breaks the two-day low here, that would increase the odds of a test or undercut of the prior low, and that could potentially lead to a test of the 200-day MA. Hard to believe that the 200-day MA is potentially in play just a week ago, but at this point we can't rule it out. On the NASDAQ 100, which is down about 1.2% in after hours trading, so around 11,200, it's in a little bit better shape technically than the S&P, as it's within striking distance of this 50-day moving average and could conceivably recapture the average in a few days, especially if there's a strong reversal to the upside. But as we mentioned with the S&P, if the two-day low is unable to hold, then we could see a test of the prior low or even possible undercut. So I guess for both indices, the question remains, will this turn out to be more of a symmetrical type of triangle with converging trend lines, or will there be an undercut or test of the prior low that gives it more of a descending triangle look, or even a double bottom type look where this low undercuts the prior low? And in this report, we tend to shy away from making predictions. We prefer to focus on the market one day at a time. And currently, both the S&P 500 and the NASDAQ are in a bit of trouble, trading below the 50-day moving averages with the 9 and 20-day EMA sloping lower. So in the short term, these indices are in a downtrend, and that is generally not a great time to be long. On to current holdings in the model portfolio. JD, which were long from a move above the high of the reversal candle of 1023. It attempted to clear this downtrend line but failed and pulled back in. We entered JD before the market broke down below the 50-day MA, but we know with the market below the 50, cup and handle breakouts will have a tough go of it and will struggle to extend beyond their pivot. We do have a half position with a fairly tight stop beneath the 79.35, so we'll continue to hold until we're stopped out. Tesla, we're long from an entry on 1027 over the two-day high here, following the bullish reversal candle on 1023, and our stop is just a bit lower, just below 406. So this Tesla position is just hanging on by a thread and could go either way. And that's it for the model portfolio. We're down to 2 positions, and depending on how Tesla holds up on Friday, we could be down to 1. That's totally fine by us. The market is not ideal right now, so there's no reason to be heavily exposed, and we're not in a bear market here, and nor has the market bounced for 2 to 3 days. So there's really no short setups either that we're looking to take advantage of. So for now, it's just best to be mostly in cash. There just isn't a lot of follow through right now in breakouts, and that's to be expected when the market is trending lower beneath the 50-day moving average. In terms of what's out there, stocks that are holding up really well, showing a ton of relative strength. We'll go through a few. We have SNAP, which gapped to new highs on big volume and has since formed a bull flag. This is ridiculous price action, a ton of strength in a weak market. Very impressive. There's also NET, which after a 40% surge over 4 sessions has pulled back on declining volume and is still above the 20-day EMA after just recently losing the 10-day EMA. So that's pretty impressive price action given that the market averages are below the 50-day EMA. FTCH is another strong stock that's held up really well, stayed above the 20-day EMA while the market sold off. Also has an RS line that's almost out to new highs, well ahead of the price here. HOLX, nice little cup and handle pattern. Again, it's going to be tough for these breakouts to work when the market is weak. But if the price action can hold above the 10-day MA and chop around for a bit here, it could definitely be in play if when the market bottoms out. A few IPOs are showing relative strength. One of the strongest is U, which broke out to new highs on Thursday on a slight pickup in volume. Snow, trading in a tight range on 1029, could be in play for aggressive traders over the high of 1029. Or if the price action pulls back into the 9-day EMA and holds, maybe you can get a lower risk entry point there, looking for an immediate reversal back up and through this 278 area. That's assuming that the market cooperates. MELI, this is a base breakout, a cup with no handle. And MELI cleared its short-term downtrend line and closed back above the prior day's high. And this pullback could be considered a higher handle here. That's bouncing off support of the 20-day EMA. And last up is PDD, which tried to break out from this little handle here and did manage to close above the high of the handle, but well off the highs of the session. Really not actionable right now due to market conditions, but something to keep an eye on. And a few more here. SAM for aggressive traders, a nice bull flag type setup. STTK also potentially setting up for a bull flag like breakout. Whether or not these setups are even in play will depend heavily on the market. I'm just showing you some of the stronger charts that are out there still. Well, that's a wrap for this video. Thank you for joining me, and we'll see you again next week. Have a great weekend.